Welcome to my channel, 10x Investor. I hope you guys are all having a great day, although the markets say otherwise. Today, I want to discuss a few things about what's going on in the markets, what can you anticipate going forward, and I'll go into some key metrics that I think are really important to watch out for going forward and what markets are kind of going to face in the next few days. So, I want to start off with this interesting quote. The real hero is the man who fights even though he's scared. George Patton. The reason why I chose this quote for today is because you look at the markets, and markets are not really, they're not stable enough for a value investor like me or you to go into the market with full confidence. And I think it speaks for the market itself. Like if you look at NASDAQ today, it dropped initially in the morning. It was in the 1600s range and then climbed all the way back. And I would like to, in upcoming videos in the next day or two, I'd like to really talk about why I don't like to invest before 10 a.m. Just because the market volatility is so high in the first 30 minutes, you don't really get any sense of how things are going in the forward. But if you are a long-term investor like you or me, it doesn't really matter when you invest if you're waiting for 3, 4, 5 years for the gains to see. But just wanted to let you know, it's just high volatility, high price fluctuations going on in the first half hour. So, anyways, let's start off with the video. Here we have this. This is such an interesting data that I saw this morning from Mumu. So this shows the put options volume, and the highest volume that during each periods since over the past 15 years. So this was like whenever it reaches the historic highs of the put volume, this is in millions, and then it compares to how the S&P 500 performed in the next 5 days and next 30 days. So in 2010 we had that 12,755 millions put option volume, and then the next 5 days, S&P 500 dropped down 2%, and then next 30 days it was minus 5%. And then it happened again in 2011, reached almost 20,000, and then next 5 days, 6.5%. Next 30 days, 0.8%. And you see in 2020 again, reached pretty high, 22, almost 22,000 million options volume. And then you see that next 5 days, 6%. And the next 30 days, minus 6.52%. And then again in 2022, in September 28th, this is the craziest bear market that happened in the recent times. Look at that, 25 million, almost 25 million. And then you see in the next 5 days, S&P 500 risen actually about 1.73%. And the next 30 days, 0.8%. 2024, August 7th, this was like 7 months ago, where it reached 28.8 million put options in volume. And look at that. S&P 500 grew 5% in the next 5 days and then 10% in the next 30 days. This is this is insane. And this is when like August 7, 2024, I was seeing the news. This is when a lot of politic things going on out there. So I don't really I think it was just like a market reacting to what may have happened. So in November, but then again, you see how the market just bounced back real fast. So, and then in 2025, March 10th, we reached 31 million in put options, and we're just waiting on to see how the S&P 500 is going to perform in the next 5 days, next 30 days. Well, next 5 days obviously reached pretty low, and the next 30 days we have to wait till April 10th to see how it was. And during March, I would say this number has definitely hit record highs, even higher than this, because everybody's bearish, and people that want to try to make quick money, they're going to go and buy those put options that are expiring, 2 months, 3 months down the road, and then you have a quick bounce back. I mean, people are going to be screwed, especially you buy these put options right now, such a high prices, premium prices, and then you're going to go into like a market for the next 3 months without much clear data of earnings like weakening. I mean, the guidance is a little bit weak, yeah, sure. But the numbers right now for the current quarters, especially if you see like Lululemon, if you see other retails, they're not doing bad. If you look at the total retail is has risen higher in February. The spending has risen 0.4% if you want to go and look at that data. So the spending hasn't really, there's no real data suggesting that the spending has come down in consecutive months. January, yes, a little bit down, but February, it bounced back up. So people are just speculating, just reacting to speculation that tariffs is going to do some crazy thing to the market. It's going to put us into recessions. Everybody's going to um, all these companies are going to crash and we're going to have just bad times for the next 100 years, but that's not the case. They're going to bounce back. Look at that, 2024 is the most recent time, 10%. What happens if the market goes back up 10% in the next 30 days? What do you think is going to happen to this 31 million put options that everybody just bought? They're going to go broke. Next 5 days, S&P 500, if it reaches like after April 2nd, the Liberation Day thing that Trump was talking about, imagine if after April 2nd, all the investors are just say that, screw it, I'm going to go back in. All these prices that you see in the stocks right now is so cheap that I'm just going to buy everything. These guys are screwed. So the reason why I brought this up is because I don't want you guys to depend on these short-term swings and putting your money in places where there's no guarantee. You look at a new company, or you find this new stock, and you do all your due diligence research about it. It's a good company, good growth, but it's been beaten down. You trust in the company, put your money in the company, buy the actual stock, because you will always have the stock. You are not going to have your options. Your options are going to expire worthless, and you're going to lose all your money. Don't do it. I've learned this mistake the hard way, and I'm telling you guys, don't go into options unless you're 100% sure. Unless when everybody's so greedy and markets are at all-time level highs, then maybe you look at what is really expensive in the market out there. You look at their forward PE, and it's just really close to the trailing PE. Then those are the moves that you make, but it's not something that you should be depending your long-term wealth creation on these put options. These are gamblers. So next I want to talk about is this is the S&P 500 chart, comparing with Dow Jones and Nasdaq in the year-to-date market. And if you look at this, Nasdaq is down 10%. S&P down 5%. And then you see Dow Jones is just down 1.28%. So if you say this first 3 months of the market is like so bad, the indexes don't really show much, right? So the indexes just, they're not that crazy down. Like S&P 500 is only down 4.6%. But everybody's just freaking out because like their retail stocks, if you look at their retail stocks, they're down a lot. So I just want to bring this graph out. If you look at this 52-week range for like HIMS, Alibaba, not so much, but the stock market, all these like these IT stocks, they're all in the 52, like the 52-week lows. If you look at it, it's below that range, majority of them. And then I want to bring out these major company stocks. And if you look at that, more than half of them are below Dexcom. I think this is MongoDB. If you look, MongoDB is at a 52-week low. Symbiotic, the AI, like um, cyber protection software, 52-week low. See, majority of these companies are like almost close to their 52-week lows. But then you see that S&P 500 has only dropped 5%. So the reason people are so afraid of this current market right now is because their stocks where, the sheep followed and bought all these stocks at such a high valuations, they got wrecked. They really got wrecked. And that's kind of the reason why they feel so much effect of this stock market correction. It's not a crash, it's a correction. Because if you want to crash, you want S&P 500 to go down 20%, NASDAQ to go down 20%. You need to see Meta go down 50%. You need to see Amazon probably go down 40%, Apple go down about 40%, Google 40%. Like, no, no, you're not going to see that. Good luck. If you just tell me that Meta might go down to 300, wonderful, wonderful. What am I going to do next thing is buy more, buy as much as you can. So you're not going to see much of these moves as much without real data coming up. Today, Microsoft hit 52-week lows, man. It hit 367 and then bounced back up to 375. A lot of these stocks today, if you look at it, Meta dropped to 555, $25 below the closing rate, and bounce right back up. Why? Because people know the real investors, the retail investors have the money. They're waiting. They're waiting for these low levels and they're gonna buy, buy, buy. And then you get these like noob investors like new to the market and they're like, oh my God, it crashed down. I'm just gonna sell everything here and just like hope that it's gonna go down even more and then I'll buy. No, you screwed up. Screw up pretty fast in this market. So I'm telling you guys because I made those mistakes and so you guys can learn from it. The next I want to talk about is AMD. We got CEO Lisa Su went on to Yahoo Finance today and talked with Brian Soggy. And so I saw this video and I just want to just speak a few things about this video. Um, it, I thought it was just a great interview. She really spoke about the ZT systems uh, that was acquired recently by AMD. She spoke about what would the tariffs really or how the tariffs are going to impact AMD, and also showed how the company is really like positioned well going forward to expand on um, expand into like large scale models. So I'm just trying to find this this interview that happened today, and it was just amazing. And I think everybody should watch it, at least people that have interest in AMD. Here, let's see here. This is the one. And if you see here, he says that the need for compute continues to be immense. And we see that throughout all of our customers globally. And we are going to continue to invest strongly in this area because I think this is the single most important technology. I like to say it's the single most important technology of the last 50 years. Um, and more importantly, they closed down the deal with the ZT system. So they closed it today. It was successfully acquired by AMD. It was first announced in August of 2024, and so there they have it. They have ZT Systems. Now, ZT Systems is basically a engineering and manufacturing company. It specializes in the compute and storage solutions tailored for like hyperscale cloud computing and internet infrastructure providers. And their product offerings are just vast: web services, analytics, content delivery, and integrated rack level systems, which is a direct competition to what NVIDIA is doing right now. So AMD got their CPUs, they got their GPUs, and they got their ZT scaler to build these huge, massive data centers. And now they have this ROC software system that go with their chips. So they're like basically having positioning themselves so well and strong competitor to NVIDIA. And you don't be surprised if NVIDIA, if AMD just goes beyond $500-600 in the near future in the next couple of years, because there is no other competitor to NVIDIA GPUs other than AMD, period. There's really no other. Tell me one company in the world that builds chips that other companies are buying because NVIDIA's chips are too expensive, or that NVIDIA's chips are just not available. It's AMD. They're buying AMD chips. Like Meta is buying AMD chips. Amazon is buying AMD chips. So this is AMD shouldn't be thought of as a oh, it's a loser company, it's advanced money destroyer. No, it's very well positioned going forward, and it has a huge, huge upside. So I'll do a detailed research on AMD, and so you guys can kind of get to know what you're getting your hands into. So next on the list is I want to talk about gold, man, gold. So gold is definitely like ripping up and up and up and up. It's at 3160 per ounce. So I feel like not too long ago in 2023, like gold was like 2200, or it was so cheap, and now it's like 3100. But I'm not a gold investor because if I were to buy a kilo of gold, the value of the gold is going to go high, but it's not producing any income for me. It's not a company. You just own a piece of metal, and the rarity of the metal is what causes the price to go up. So it's not an actual like a company or real estate or anything. It's a commodity. So you just anticipate and hope that this this finite amount of metal uh, demand goes up, so the price goes up. And so, but it's crazy. See, I don't really like to see commodities to really go up and up and up, because people only invest in commodities when they know that markets are not going to do really well. And that's kind of the reason. But again, we have such a high demand in other areas like chip building, where you need gold. You need like all these data centers, infrastructure building, where you need a little bit of gold. So that could possibly what be why, but there are hundreds of reasons right now. You can see these markets are not doing too great. But hey, you know what? They dropped in the beginning of the market open, but yeah, it was a nice climb back up. They don't want to see the markets down. Consumers and the retail investors, and they know, they're like, no, this is just a foul play. They're not buying it. No, if today is the fact that investors are not buying this crash, it was not some like drastic uphill, and this is a normal, like very well positioned, nice linear graph. If you look at that throughout the entire day. So I believe that I don't ever underestimate United US consumers. They're very resilient. They're gonna buy. They're gonna buy more, and they're gonna keep the economy growing. Okay. Next up on the list is I want to show you guys this. So this is the AAII investment sentiment, and they've been doing this research for over like 50 years now. And if you look at the sentiment, on average, it's about 37.5% bullish, 31% bearish, and then 31.5% is neutral. Okay. If you look at since the beginning of March, people are rating the sentiment as more bearish: 57.1%, 59.2% on March 12th, 58.1% on March 19th. But if you notice this, this is starting to come down. So I see that people are more bullish. It's like one of the big jumps, just went it's almost at the average. I mean, it's just 10% more. I mean, it grew about 6% in 1 week. So I wouldn't be surprised if this number goes up to like 32 this next coming week. And then next thing you know, it's like 40%. And then April 2nd happens, nothing happens to the markets. And everybody's like, all right, time to buy, 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 buy. And then you see these Meta stock, Meta, Amazon going up to like 700, 240, 250. And so that's the main reason you can't really go and fear the markets, because the real hero is the man who fights even though he's scared. So you got to really understand these markets, they'll set you up and then you lose it. And then at $700, Meta, everybody's going to start buying in. Oh, it's going to go back up. It's going to go back up. But guess what? You just missed a chance at 555, and you're going to buy the same amount of company for $150 more. So don't make that mistake. It's a good company. Buy it. You know what? If it goes to $500, who cares? Buy more. It's a good company. 3.5 billion people using it every day between WhatsApp, Facebook, Instagram. They have their metaverse developing. They're investing a lot in AI. So use those analytics and invest in a good company. Next on the list is here, we got the fear and greed index. This is a CNN greed and fear index, and it's been going on for a long time. And you can always see, like, where is the markets, shifting towards? Are they at extreme greed or they're like extreme fear? Look at this 1 year ago. It's really greedy. Market, they're very greedy. Every single day you see like stocks going higher and higher and higher and higher. And then what do you see now? Extreme fear, extreme fear. And whenever I see this fear and greed index, I there's one quote that I always think of. Be fearful when others are greedy, and be greedy when others are fearful. And really, there's nothing better to say than looking at this. You can just invest into the market just looking at this. Buy SPY or SCHD or QQQ. You like to do more research? Go look at these stocks. So PayPal, Meta, these are my next buys. I'm just waiting for my paycheck and boom, going into all of them. And I'll release a video and I'll give a detailed explanation of why I bought each one of those. And next is these are the two golden rules of investing I want to show you guys. Is one is always have more income than expenses. This is nothing more than like just absolute truth. Um, and also, if you look at this, one of my favorite person's channel called Financial Education, and the guy who does it, his name is Jeremy. I don't know how to say his last name, but his videos are just absolutely fantastic. And when I saw it, like I always know that have more income than expenses, always, because you always want to buy putting it into the market. You see, you look at what stocks are doing really well. Um, in your portfolio, and they're just reaching really highs, you kind of got your target, maybe take some profits away. You see Meta one day reaching like 1300, 1400 P ratio of 40, but then 10-year average is like 25. Time to like take some profits, sell out 10, 20 shares, and then go buy something that's like, oh, for example, Nike with, P of 22. They're buying back shares, positioned well, new management changes. Go buy it, buy it. And then Nike's going to go to like $150. Sell Nike. Maybe the valuation is too high at that time. Go buy something else. It's the cycle. It's a cycle. Don't not follow Wall Street and other investors that are just saying things. Do your own research. And the second rule is patience. You got to be patient, man, in this game. This game is played at a high level, and if you do your research well and you go and um, you stay patient, you're gonna reap in such high rewards in this in stock market. There's really nothing else that is gonna be like better than. There's no other. Tell me one other place where you can make more money than stock market without getting lucky. I don't see it. So I just wanted to show you before I end off here my portfolio update. I didn't buy anything new. It's the same amount of stocks. I have AMD 160, Cake 100, Celsius 60, ELF 100, Fubo TV 300, Nike 62 shares. I think the next one that's going to be on this list is PayPal and Meta. So those two I'm going to add pretty soon, depending on how they do next week or two. So right now, today's loss is $246. And I always like to compare it just a little bit with the S&P 500 and NASDAQ, just to see how I did comparatively. And so far, obviously couldn't beat the market today, but that's okay. I think overall, if these stocks that I have here goes up to the level that I see it in the next 5, 10 years, I'm definitely going to beat the market. No doubt about it. I'm going to beat the market. Um, so thank you so much, guys, for joining in today, and I really appreciate it for clicking on my video and watching it till the end. Please press that like button and subscribe to the channel for new video tomorrow. I'm gonna be releasing a video every single day, so stay tuned. Thank you.